You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so it's definitely time to make an actual breakdown on the situation that currently we have on BTC USD, since it's full of these Bitcoin predictions, BTC predictions all across the internet, but nobody is actually giving an actual breakdown on the situation that currently there is in this market and how we can be looking to capitalize on potential moves. Everybody is shouting for the moon, but let's see what are the actual technicals and what is also the order flow from an institutional perspective on BTC USD. So without further ado, let's get straight into the analysis to see what is the actual situation that we currently have on it. Now, starting here from the monthly time frame, we can see that the market has just approached all-time highs. In fact, exactly from this area, the market had started all this move to the downside, and currently we have just hit exactly this same region. Now, when a market hits all-time highs, what you expect specifically, if it has hit all-time highs with a very strong impulse, so it's currently overextended to the upside, what you expect is a correction. So what we can expect from a technical perspective is for the market to create a retracement from this all-time highs before the continuation to the upside. Usually this is what happens most of the times when a market hits all-time highs. Now, if we zoom in and we look at how the market has approached this all-time highs, we can see one very interesting pattern, which is usually the pattern that the market creates most of the times. In fact, we can see that the market has created a quite strong impulse breaking above all the resistance that we had at this area. In fact, this zone was acting as very strong resistance here, again resistance here, and again resistance here. Now, as you know, in the market, once a level of resistance is broken to the upside, previous resistance is turned support. And that is exactly what the market has been testing here. The market broke above this previous resistance, which at that point is turned support. The market retested the level here and created the continuation to the upside, which is what you expect most of the times after a break. After a break, you expect a retest and continuation to the upside. And that is exactly, in fact, what the market did. And by the way, I had spoken about BTC USD when the market was here, and I made a full breakdown of it explaining all the reasons for which, exactly from this area, we expected the market to make this move to the upside. And I will link this previous analysis in the description. So you find it linked below, so you can go and check out all the reasons for which we wanted to see the market create a rejection of this previous monthly resistance, now turn support, and a nice move to the upside, which is in fact exactly how the market behaved. So at the moment, all structure on the monthly is bullish, but as we just said, we are testing the previous monthly high from which we do expect the market to provide a retracement, specifically after an impulse. If you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do this, so if we take our Fibonacci from the low to this high, to the high of this impulse, what we can see is that the first Fibonacci retracement, which is the 0.382, is currently lining up at this price. So we expect the market from a monthly perspective to create a retracement at least to this area here before creating a continuation to the upside. So definitely we have a lot of downside potential for a nice retracement from a monthly perspective before the continuation to the upside. Going down on the weekly time frame, what do we have? Now, on the weekly time frame, we can see that currently the market has provided an overextended W formation. Now, after an overextended W formation, again, you expect the market to give you a retracement. Specifically, you want to see the market retrace at least to the 0.32 of the Fibonacci taken on the weekly impulse in this case, which is exactly from this low to this high. And we can see that the 0.32 of the Fibonacci taken on the weekly is obviously lining up quite nicely with what we have from a monthly perspective. So overall, this would be our target zone for a retracement, both from monthly and weekly perspective. Now, one thing that we must notice, okay, in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here. This means that this red candle here is a level of previous resistance, which, now that the market has broken it to the upside, is turned support. Specifically, if we want to identify and pinpoint this support area, we can use a line chart. And on the line chart, what you will see is that the previous resistance, now turned support, is exactly this area here. And we can expect the market from here to create a rejection to the upside until the market will be above this area from a weekly closing perspective, because the last weekly close is above this zone. And this weekly candle that we are currently trading in currently is below the zone, but it still has 1 day and 13 hours before it will actually close. So we have to wait to see a confirmed close below the area before we can be looking for any kind of opportunities on BTC USD. Going down on the daily time frame, what do we see? Now, on the daily time frame, we had spoken about in BTC USD again a few days ago. I made a full breakdown after the market had created this M formation, and I explained all the reasons for which from here we wanted to see the market create a move to the upside to go and complete the pattern at the neckline, aka the previous resistance, so previous support, which is now turned resistance. This is in general what you expect after an M pattern. After an M pattern, you expect the market to create a move to the upside to go and complete the pattern itself at the previous support, now turned resistance. And that is in fact exactly what the market did, completing the pattern exactly as we wanted to see. And then we spoke about BTC USD again after the market has created this impulse breaking above this resistance. And I explained why, even though we had the impulse and correction and everybody was shouting for a move to the upside, it was actually way more probable that this was all a fake and that the market would actually break the structure back to the downside, which is in fact exactly what the market did. And by the way, I will link also this previous analysis in the description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, currently on the daily time frame, the structure is here. We have previous daily support here, again support here, which has now turned resistance here and resistance here. And until the market will remain below this previous support, now turned resistance, we can easily expect the market from here to create a move to the downside for a deeper correction to our downside target. Now, at the moment, if we go and see what we have from a COT perspective on a BTC USD, so what hedge funds are currently doing on it, if we gain access to our commitment of traders, we don't really see anything very interesting. Why? Yes, net positions are quite low. We have minus 3.2k net positions with an 86% short exposure from an institutional perspective. So that is quite good, okay, for an overall deeper retracement. Institutions are definitely having a quite high short exposure, but most of what is going on from an institutional perspective on BTC USD is hedging. As we can see, most of the times they're opening long and shorts at the same time. So there is nothing really there's nothing really from a speculation aspect, which is what we are really interested in. The reason for which when we are trading Forex, we're always looking at the non-commercials instead of the commercials is because the non-commercials are speculators, which are in the market to make money. They're hedge funds. And that is why we like to follow them. But in this case, we see a lot of hedging, so we can't really take a lot of informations on BTC USD when it comes to the commitment of traders. This is something very specific only about BTC USD. The commitment of traders, I don't really suggest to check it. So what we have at the moment is a market that is testing previous support, now turned resistance. Now, as usual, guys, trading is not predictive, okay? Trading is reactive. It's about putting the best probabilities on your side and following a proper rule-based strategy. Now, the monthly, weekly, and daily time frames, which in the case of the Forex market and commodity market, you can also combine with the COT data to gain an edge over your competition in the market, are the best time frames for the direction of the market. Monthly, weekly, and daily, combined with the COT data, best time frames for the direction. But the best time frame when it comes to confirmations and entries that is the 4-hour time frame. And at the moment, if we go down on the 4 hours, we can see that actually all structure is currently bullish. So even though we have a downside target from a monthly, weekly, and daily perspective, and all structure is bearish, anyway, on the 4-hour, we must acknowledge that the structure is currently bullish. And until everything will remain like this, the market will easily continue to the upside since it has bullish structure and bullish momentum. So we absolutely cannot be looking for any kind of shorting opportunities, and we will not be looking for any kind of shorting opportunities at the moment with students on BTC USD. But things might change in the future, which is exactly what we will be waiting for with students. In fact, what we will be doing is monitoring price action from a 4-hour perspective inside of this area, waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And if, and only if, the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding BTC USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the deeper correction that we would like to see from a monthly and weekly perspective. But until that will happen, the market will easily continue to the upside and continue to create manipulations inside of this area here, which, as we have already seen from a monthly perspective, is the all-time high zone in which a lot of manipulations can go on, a lot of stop hunting, because hedge funds need to grab the liquidity to create the next move in the market. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.